Many entrepreneurs form limited liability companies, LLCs, to enjoy the benefits of this business structure. However, once they start earning revenue, they often struggle with how to properly pay themselves from their LLC. This guide explains the correct methods to pay yourself as an LLC owner to avoid complications and ensure financial responsibility. Understanding owner's draw. As an LLC owner, you have the option to pay yourself through an owner's draw, also known as an owner's distribution. An owner's draw is when the business owner transfers money from the business account to their personal account for personal use. Key points to remember. Always keep personal and business finances separate to avoid commingling funds, which can lead to legal issues. Think of the owner's draw as a withdrawal from your LLC's bank account to your personal account for personal expenses. Steps to set up an owner's draw. Step 1. Obtain an EIN. An EIN, Employer Identification Number, is a 9-digit number issued by the IRS to track businesses for tax purposes. You can apply for it directly on the IRS website. Step 2. Set up a business bank account. If you haven't already, open a business bank account using your EIN. This account will allow you to deposit business earnings and keep funds organized. Step 3. Make your owner's draw. Once your business earns revenue and you're ready to pay yourself, you can transfer money from your business bank account to your personal account. For a clear paper trail, it's recommended to use a check or bank transfer rather than cash. Record each draw with the date, amount, and purpose for bookkeeping purposes. Once funds are in your personal account, you're free to use them as needed. Owner's draw versus salary. One of the benefits of an LLC is flexibility. You can pay yourself via owner's draw instead of a salary and decide how frequently and how much to draw. Many LLC owners enjoy this flexibility as it allows them to leave funds in the business when cash is needed and withdraw more when they're ready to take profits. Caution: avoid withdrawing too much too soon. It can be tempting to withdraw large sums early on, especially when profits start rolling in. However, it's essential to leave enough funds in the business to cover expenses, including taxes. Tax obligations. LLC owners are required to pay self-employment tax of 15.3% on top of income tax. This includes 12.4% for Social Security, 2.9% for Medicare. Failing to set aside enough for taxes can lead to financial strain and, potentially, bounce checks if funds run low. Example scenario: if you make $130,000 as a new LLC owner with $70,000 in expenses, including taxes, and pay yourself $60,000, you could find yourself in a tough spot if an unexpected expense arises. Always keep a buffer in your business account for unforeseen costs like equipment repairs or marketing needs. Tax implications for LLC owners. LLCs are pass-through entities, meaning profits, losses, and tax obligations pass through the business entity to the owner, avoiding double taxation. Unlike C corporations, which are taxed at both corporate and personal levels, LLCs only face taxes at the individual level. Limited liability protection. An LLC offers limited liability protection, which helps protect personal assets. In case of a lawsuit, only business assets, such as bank accounts or equipment, are at risk, not personal assets like your home or personal bank account. The combination of liability protection and pass-through taxation makes LLCs a popular choice among new business owners. Considering an S corporation transition. As your LLC grows, you may consider transitioning to an S corporation to reduce self-employment tax obligations. S corporations allow you to take a salary, which affects payroll taxes rather than self-employment taxes, potentially reducing overall tax liability. If you're considering this shift, ensure your salary is reasonable relative to business profits. For example, a $70,000 salary may align with a business earning $100,000 in profit, depending on your industry. Seeking professional guidance. For personalized advice on paying yourself as an LLC or S corporation, consider a reasonable compensation audit. Tax professionals can assess your net profit and business strategies to determine an appropriate salary, helping optimize tax benefits and meet compliance standards. If you have questions about LLC payment structures, tax planning, or entity structuring, connect with a tax firm for guidance tailored to your situation.